Hey, good morning. How are you? Today is a Friday. Yay! Friday. CPI, CPI, CPI. Inflation. Yeah, Inflation Friday. Nice. The date is August 11th. Friday, August 11th, 2017. This is your daily Forex trading strategy webinar, hosted here at Forex.Today. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, however good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Hi, nice to meet you. My name is Wayne McDonald. I'm the Chief FX Market Strategist for TradersWay.com. Put your diamonds in the sky. See the diamond next to Traders Way? Thank you for being a client to TradersWay.com. My name is Wayne McDonald. I am the Chief FX Market Strategist. Been trading Forex a long time, so I'm here to assist. How can I help? Scalping, spot trades, swing trades, position trades, portfolios, technical analysis, fundamental analysis, trader psychology, and how to be a well-rounded, kind-hearted, good-looking, thoughtful human being, maybe? I don't know. Sure, Paulie. I'm going to increase the font. Boom! Uh-oh. Who's wearing the jumpsuit? Uh-oh. Joe. Like Brazil Joe? Like Jagman Joe? Portugal, sorry. That's it. I just shoot myself in the blood. Oh! So you speak Brazilian? I knew you spoke Brazilian, that's all. I love seeing someone from South Africa meeting somebody new and they're like, he's not English. He's not Australian. Maybe he's from New Zealand. So, I don't know. Just messing with you, Joe. I love that. Yeah, I speak Brazilian. Yeah. Jay's killing it. Killer. All right. So a few people go through frustrations. By the way, often the frustrations come from the market conditions, not what you're doing. But the worst thing that could possibly happen is you get frustrated because you're doing what you think you're supposed to be doing and it's not working. So by the time September comes around, you give up and you just try something new and you just miss it. And Jay's setting it up. Cool. You got to be patient in August. Hey, do you guys remember when the VIX was at like 8.5 and 9? Who remembers that conversation? By the way, go to Traders Way and open an account.
Market data at events at the top of the hour. Again, India's June industrial production expected to be up 0.1%. It was up 1.7%. We did see India's central bank cut rates in its most recent decision.
Okay, get that there. Yeah, how many people remember that? Maybe end of July, 3 weeks ago maybe? And I'm like, hey, so we talked about it, and I said, do you really think the stock market's going to stay low? Do you really think the markets are going to stay flat? Do you really think when September comes around nothing will happen? Or do you think the VIX will go up? I think like 8 or 9 people said, yeah, I think VIX is going to go up. How many people remember that conversation? How many people don't remember the conversation? I mean, somebody said, you know what, I'm going to write it down, right? Somebody actually said, I'm going to write it down and all this kind of stuff. Did we thought the VIX would fall, or did we think the VIX was going to rise? Yeah, Ryan wrote it down. Yeah. Yeah, right. Okay, cool. Did you know it was up 44% yesterday? What? Yeah, at bottom only go up. It was up 44% yesterday. It's a futures contract. Oh, up 50% now. All right, there you go. So you go to jrcigars.com, buy a virtual gift card, and you send it to Wayne at fxbootcamp.com. See? See how easy that is? You're welcome. Okay, so let's go to the world here. Swissy. Yeah, I want to look at Swissy. It's an important factor. I was talking to a billionaire yesterday, actually 2 o'clock in the morning. What were you doing at 2 o'clock in the morning? Yeah, I've only slept 3 hours, by the way. How do I look? Well, 4 hours. Went to bed at 2:30. It was up at 6:20. So anyways, he loves Switzerland to do business. He's like, you can't do business here anymore. You can't do business there anymore. La-di-da-di-da-di-da. Switzerland. The Swiss are back. Like, good to know, right? So now I know 2 billionaires set up in Switzerland. Man. Got to get me $1 billion and go to Switzerland. But if you want to spend your $1 billion, Switzerland's a pretty good place to spend it. It might not actually be enough. So anyways, Swiss franc. It's sort of another canary in the coal mine, so to speak. Kind of watching this area. You can see I've already highlighted it. No real fibsy. Earlier, was it earlier in the week? I guess Tuesday, right? It hit the 618 and then at least stopped. It rose for a while. And that's failed so far. Well, the 618's failed. So now you just got to be patient. Is it going to roll over or not? Okay? You wait. You wait. Now, moving money to Switzerland is a risk-off scenario. So if you're a billionaire and you got all your money sitting in a bank in Switzerland, it's not deployed. You want to take a country like, I don't know, South Africa. One reason it's poor is that there's a lot of money in the country under people's beds. We have a lot of South Africans in the room here. So, hey, South African brothers and sisters, do you know anybody that's got like money hidden in the freezer in a coffee can? Do you know anybody with money under the mattress? Do You know anybody with like a suitcase buried in the backyard? Don't say who, because jeopardize, right? even even Adam, Givness is like, what else do you do with the money? Yeah. Nah, it's only Rand. That was the funniest thing. My first few hours in South Africa, I'm standing in line to check into my hotel room. One guy says to the other, he's like, it's only Rand, don't worry about it. Yeah. So anyways, that money doesn't get deployed. It doesn't get multiplied. Okay? That's how a country gets poor. So if you've taken the fundamentals course, you know 1 over R plus E, right? And you do the money multiplier formula. And by the way, when you get into economics, that basic money multiplier formula can get a lot more complicated. But nonetheless, $10,000 hidden under your mattress doesn't grow. It just sits there. It's $10,000. If you put it into a bank, it gets multiplied into $100,000. That's why rich countries get richer and richer and richer. They have, money put into the bank. So, anyways, money going to Switzerland is one thing. And if you park it there, then the Swiss bank gets to play with the money because they're a financial intermediary. So they take your money, they pay you something, or maybe they charge you something. But you give them the right to take your money because now if you know the balance sheet. So again, if anyone's done the fundamentals course, one of the things we do is the balance sheet for a commercial bank, right? And the deposit is an asset and a liability. But under bank capital, under the asset stuff, you can go out and start investing other people's money. So you can buy a bond that pays you 5%, right? And you're using other people's money, your depositors' money. And at the end of the year, you give them maybe 1%. So now the bank keeps the other 4%. How nice is that, right? So anyways, if you're a billionaire, though, and the market's good, why would you have your money parked in a bank earning 1% or in Switzerland charging you money? They pay you, Switzerland pays you to invest money. So you invest money in other places. And so when things are bad, the Swiss franc is strong because money is being brought back to the bank account. And the Swiss appreciates. And when the economy, global economy is doing well, those billionaires invest their money and it leaves Switzerland, goes to investment opportunities, and the Swiss franc weakens. Okay? You see? So this is a great canary in the coal mine. If these pairs are heading down, that's not a good thing macroeconomically. Okay? But are these all in the same? Let's put all of them on a 4 hour. 4 hour, 4 hour, 4 hour, 4 hour. If we can find some support here and turn it around, that would be, even though it's a technical thing, fundamentally important. I don't know if there's such thing as a green flag. What's the opposite of a red flag? Well, if it's a green flag, we don't have it yet. But over time, you should be watching for it. Okay? It's the other yen. Okay? Yeah, we did this yesterday. These are yens at all. It's funny. Well, I guess we could just change them. Give me a yen, 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 yen. Got to do all six. Let's see what else we want. Try. See, cat. Yeah, I guess we got to do Kiwi. Swissy, no. Aussie did it. Pound. I kind of like CAD. Let's do CAD. Yeah, we're good. Should we do pound or euro? I guess we want it to go up, so let's do euro. But even that, no, there's no carry. Anyways, we'll look at it for some reason. Okay. Why did I draw this? Looks damn important now, huh? Interesting. I don't know why I drew that. Looks really important now. Joe, how would I know that? You got to be careful, Peter. Oh, is that there? I get more serious about the third week of August, and we're not quite there yet. When did I say that I start? How? I say the third week of August. It's the second week of August. When did I say the third week of August? I'll start looking. How long ago? A week ago? When did I tell you? A week ago? A month ago? When did I say, hey man, third week? Yeah, last year, 2 years ago, a couple weeks ago, 4 years ago, 5 years, I don't know. So it's every year. Yeah, that I remember. Yeah. So, you know, I'm not looking away, but I'm not super excited either, right? Could happen now. Probably won't. But anyways, this whole idea a couple of weeks ago, I said, don't be shocked if this whole thing comes down. Okay? Which is different, isn't it? A couple of weeks ago, we were up in here, and I said, don't be shocked if this whole thing comes all the way back. Right? Yeah, see, I guess I'm just connecting these, huh? This. Guess I can draw it. I think maybe I'm just connecting this low with this high and all of that noise. Well, Peter, nobody's trading right now. So, whatever reason you want. Maybe it's just people, they took profit and went on vacation. I mean, right? Like, think about it. Somebody was long earlier in the year, right? Right? So why not just in here at the end of July, they took profit and went on vacation? Right? Well, we don't know, but why does it have to be the end of the world? Why isn't it just people went on vacation, took some profit, and went away? And when they come back, they'll do this again. But you don't hear that on TV, right? Yeah, no, there's some major reason. There's some major malfunction. You know, when you see stuff like this, let's clear this, right? I see logic and intelligence going on. So, who did swing trading this week or last week? Don't let me forget about CPI. We have about a half an hour. What do I want to do? It might be these. Okay, yeah, we can do some of these. Okay. So if you took the swing trading course, you know that's a pattern, right? Exactly this to this whole green zone. Okay? Perfect. Absolutely perfect. Okay? Let's try another one. So, oops. Let's see. A high here predicts a low down here. Another good trade, right? Isn't it gorgeous? Aussie yen. Right? If the high is here, the projected low is here. I'm sorry, not perfect. Okay. Now the interesting thing is the monthly is here as well, right? So what's the target for the monthly swing down? This is actually the target. If you're doing a monthly position trade, right? If this is the top of the month, bear in mind the first of the month is here. So if price does not go any higher than this, it's actually this whole zone here. If you're a bear on a monthly position trade, the target for this is right here. Right there, actually. I got to draw this a little better. It's actually right here. Isn't that cool? So Jorge finished the swing trading course and got 225 pips. Good job, man. George. Jorge. Those are some good pips, man. What else? all been quite bearish. So we're out of monthlies for the beast. Just not much more to do. Yeah, right now I only have 2 screens on this setup. So that's all I have on this one. I usually have 3 screens, but I just don't have space. And I've just been too busy to do anything better. It works fine. Right? Paul says, keep selling. That trend is going to go on forever and ever and ever and ever until it stops. So, which ones are you going to tiptoe in first? Well, I would suggest high yielders, and I would suggest things that you're bullish on, maybe commodities. The chaos table? Not sure what you mean, Freddie boy. Yeah, I guess because you're doing the basic training program. Yeah, no. Yeah, so that's from years ago. So that's not produced anymore. Oh, it's totally cool. So Kurt Worley was my quantitative analyst, and he would do that well, maybe monthly. Those are all days gone past. But you'll notice my trading techniques haven't changed. All right, so what? We got CPI coming out. Any thoughts on CPI? Well, we don't have the inflation the Fed was hoping for. The numbers have been bad for the last few months, stagnant for the few months before that. What are you thinking, 0.1? So this goes back to a conversation we had a few days ago. Like, why should the stock market fall when the Fed is going to need to slow down the rate in which they're raising interest rates? The velocity needs to change. Okay? And so when money is cheap and available for business, right? When money is cheap and available to businesses, they can invest. Credit is available to consumers so that they can spend. And it's generally a positive thing for the business cycle. If the cost of borrowing goes up, then that eats into profit margins, and eventually that's a bad thing for the economy. Okay? So if interest rates are going to stay low for, years, then that's actually a pretty good thing. My chair is too fancy. There There we go. Yeah, by the way, if you're a serious trader and you sit for a long time, get yourself a very nice chair. Absolutely worth it. Oh, so come on, CPI. So yeah, so anyways, it's not going to be a great number. The Fed's going to need to pay more attention to the fact they don't have the inflation. They still need to taper out of their, well, they don't need to, but they're going to taper out of their balance sheet. And, oh, we talked about glide path recently, and somebody said, can you talk more about that? So, what would happen if the Fed dumped their $4 trillion portfolio on the market today? It'd be the end of the world. The bond market would collapse. So they obviously can't dump everything, right? So can they dump some? Well, they would only crash some. So they need to be smart and wise in which they unload their balance sheet, because it's not their intention to spook the market or actually create a bear market. So there's one way that they can do it, and that's take everything that can expire and let it expire, or mature is what they say. But what if the Fed is holding your mortgage, right? Because the bank that held your mortgage, or the financial institution that held your mortgage, got into financial trouble during the crisis. So now the Fed is holding your mortgage. But now that the market's better, prices have gone up, you're not underwater, but you still are paying 6% interest, pre-crisis on your mortgage. What's the likelihood you're going to try to refinance that mortgage now? You can go from a 6.5% mortgage to a 4.5% mortgage. Do you think it's pretty likely people would want to do that? Come on, hit me with your business sense. Thank you, Dan. Thank you. Of course. Okay, great. So you refi. What happens when you refi? You borrow a bunch of money from a new institution, and you pay the old institution, which means money goes into the Fed. Fed no longer holds that mortgage. Okay? They haven't gone into the market. Someone bought it from them. Now it's off their balance sheet. What if you pay off your mortgage? Not on the Fed's balance sheet. So that kind of stuff is going to happen. And they're going to let it happen, which is great. That's one way to shrink it. Another one is to actually go to the market and sell some. So here's the interesting thing. This is very similar to raising interest rates. Okay? Because when the Fed sells through open market operations, again, now we're going into the fundamentals course. When the Fed does OMOs and they sell, it forces interest rates up because bond prices are going down. And when you're selling, you're forcing prices down. So what if they don't really want to raise interest rates that much? So what they could do, and this is glide path now, they come up with a strategy, they come up with a plan, they say we want to unload our balance sheet, but we don't want to raise interest rates. So what they end up doing is they sell what they need to sell, but if interest rates go up too much, then they go into the market again and do some buying. just enough to keep interest rates at a certain level. So it'll be interesting where, let's say they sell, let's say they sell $1 billion worth of assets on their balance sheet from 2009, but that it affects the market too much, so they go into the market and they do some buying of something else, maybe 500 million. So at the end of the day, they've only trimmed their balance sheet by 500 million, but they've rolled over some of the assets and they let other assets kind of expire, if you want to call it that. And they don't just go in the market, sell, 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 sell. They go sell, 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 buy, buy, and then next month sell, 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 buy, buy, then next month sell, 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 buy, buy, and they keep interest rates where they need, and they're just sort of swapping assets and letting other assets mature, just roll off the balance sheet. So it's sort of like landing an airplane. That's the idea of glide path. Do you want a steep glide path, or do you want to come in nice and soft? Okay. Yeah, did I mention I've only slept 3 hours? 4 hours? 3 hours? Yeah, sorry. Come on, CPI! Okay. Tiptoeing into positions here. So one thought, and we might have talked about this in June, we talked about peak oil, and it's in here. Bottom. I know this is CAD. And then oil was at like 42 bucks, and then 44 bucks. And somebody said it was going to go down to 35. Does anybody remember this? Somebody said it was going to go to 35. I said I think it'd go to 65 before it would go to 35. Yeah. That was oil. So if oil, and I think one of the things we talked about is, I'm not saying oil's going to go up, but there's no reason why oil should go further down than this area. I said 42, 40, it's all the same to me. But I don't see it really needing to fall any further. The global economy is not doing so bad. Demand should pick up over time. OPEC is trying to get prices to go up, so I don't see why they need to fall. So if we're near the floor, then there might be a lot of upside. I'm not saying there will be, I'm just saying if it's going to be very difficult to get it to fall further, then maybe it'll go up. I think one of the other concepts we talked about is people buying it simply because it's cheap. And that's the whole floor mentality. I think we talked about how people bought it simply because it makes money, not because of their fundamentals of, their fundamental outlooks radically different up here than here, right? Essentially nothing changed over that course of time. So I don't know, if you're still playing on the global recovery idea, CAD's not the worst thing in the world. Okay. So pay attention. This is the projected bottom for the month. Okay? Isn't that neat? CAD yen is not supposed to be any lower than this. Funny thing is, if you're a monthly swing trader, I've taught you that if this blue area at the top is the top of the month, now I know it went above that for a day, but we're talking about a month now. If that's your top, so you need to be bearish, then we've just hit our target for the month, the conservative target. So if you thought August would be bearish, this is the zone. So this orange line is your conservative target. Isn't that cool? Only if this is your top. Look at that, it's a quad top. Is that great? Is that just like fantastic? Yeah, but oil was $50 a barrel back then. Well, maybe that was psychologically important as well for oil. Did anybody short oil yesterday at $50? I think I sold it at like $49.95. $49.95. So. If you sneezed, and looked up, it was at $48.50 or $48. Woohoo! What's $1.50 worth on a futures contract? You sold one. What's it worth? $1.50. $1,500. Woohoo! Yeah. It's a lot, man. Yeah, well, so Devista, like, you know, how do you pick which one? It really comes down to like what the logic behind the trade plan, right? Okay. So if I want to build a portfolio between now and the end of the year, and I want to earn interest, it's a carry trade. Which pair should I go with first? The first one is ideally what I buy has a good carry. Kiwi, Aussie, peso, maybe, right? That's the first thing. The second part is, what about just fundamentally, what do you think is going to appreciate most? Is that a 2% or 1.5%, 1 3/4, 2% yield? It's really not that big of a deal, is it? So, which currencies do you feel are just more likely to appreciate? So that takes some fundamental macroeconomic, even microeconomic stuff, right? Wages, inflation, that kind of stuff. You start picking. Is New Zealand going to be in a better place soon? Yeah, maybe, right? All this kind of stuff. With all that decided, then you can go in and look for your trade. But the trade plan isn't on your chart. That's tactics, right? So that's how I choose the pairs. I don't go looking for trades. I design trades, right? So wouldn't it be nice, as the yen and the Swiss franc are strong right now, wouldn't it be nice that sometime over the next 4 weeks, I see a change in trend and the yen weakens and the Swiss franc weakens? Look at that. Glorious. Look at that. Dang, boy. Okay. Now might be time to start tiptoeing in. Cool. So if you're going to buy oil, you might as well buy CAD. Let's try. Alouette, ton gentil alouette. Alouette, ton gentil plume. All right. Gentil plume et le tête. Gentil plume et le tête. Et le tête, et le tête. Alouette, alouette. All right. Ah. I might not be a smart man, but I know what a pip is. Okay, let's do CAD yen maybe. They're a little bit similar, aren't they? I don't quite. Oh, that's why, because these are monthlies. Do do do. It's funny, they're both 6 weeks. They don't quite look the same. So 1, 2, 3, 4, 5, 6 weeks. 1, 2, 3, 4, 5, 6 weeks. So it looks like been up, consolidation, and down a little bit. So it's not perfect, right? So you can see some yen is played in there. But one thing that you can try to do is combine CAD with oil. You might trade CAD instead of oil. Okay? Let's try a different pair here. Strong trend down, strong trend up, consolidation. So again, it's not a one for one. Thank you. That's pretty close too, don't you think? All right, let's bring up tradethenews.com.
This is a 24-hour live broadcast test channel from the Trade the News Broadcast Network. If you are hearing this message, your sound card and network configuration are working properly.
Can you hear that all right?
Minute to the CPI data. One of the headline CPI data month over month has negative readings in 2 of the last 4 numbers. Today's CPI expected 0.2%, core expected 0.2% as well year over year. CPI expected 1.8%, core expected 1.7%. July CPI data in just a few seconds. CPI 0.1% is 1/10 lower than expected. Core at 0.1%.
Who said 0.1?
Expected year over year. CPI at 1.7% is 1/10 lower than expected. Core in line at 1.7%. Regional average weekly earnings for July at 1.1% year over year.
Stock market should rally.
They revised 1.2% in the prior month. Hourly earnings at 0.7%. They revised at 0.9% prior.
So only 1.7 year over year. That doesn't sound like 2% to me. Not even for government
Dollar
work.
weaker following the CPI print. Euro approaching the 118 handle, higher by 0.25%. Dollar yen 108.85, getting given a few times here. Softer data following the softer CPI data.
Cool. Lower for longer. It's good for business. What happens if you're a business, if your profit margins are 5%, but your cost of borrowing is 6%? what happens to a shoe store that has 5% margins, but suddenly it costs 6% to borrow the money to buy inventory? What happens to the shoe store? Yeah, you go out of business. So is it good news for the shoe store that the cost of borrowing for their inventory is going to stay really low? That's what we just had. So I'm looking at the year over year here. So that should be good for the stock market. I'm looking at the year over year right here. 1.7. Okay. So I would think the market would come down. Sorry, the stock market should go up. I'm sorry. Stock market should go up. That's good news. The costs are going to be low. So we'll see. Last half an hour, the market's been up. VIX at 16.5. Remember, you could have bought it at 9. Wow, 10-year was at 2.33. Now it's at 1.19.
Brazil's central bank governor
It's a
commenting
contract.
that the
It's a
recent
futures
data
contract
seems to
here.
confirm that the country's stabilizing economically.
It's like buying any other financial asset. Yeah. Yeah.
The dollar softer, spot gold up about 3/10, edging closer to 1,300, just $10 shy at this point.
Look at the 382.
$1,290 trade, just shy of the 1,300 level. Gold higher, dollar softer post data.
Pretty close to the target. If you're doing CAD, be very, 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 very worried about this area. Loaded like a freight train. More and more to never came. I feel like a spaceman one more time tonight. Cool. Some good action going on. Let's drop all of these into 15-minute charts. See what we can see. Aussie on fire, Kiwi on fire, CAD on fire, Euro on fire, pig getting slaughtered, dog getting slaughtered. Right? Amelia, I don't even know. So I moved my stop, Amelia. And after that, it doesn't exist to me anymore. Right? When I'm done my analysis, I enter trade. Then I do risk management, which means I move stops. Depending on the strategy, move limits or whatever. So, like, I don't know. All I know is I've managed it. So, okay. Much more interested in these trades here. Look at this, just gorgeous, huh?
China and PBOC saying they will continue with prudent and neutral monetary policy. It's a reiteration of their stance. Brazil Central Bank Governor Oldfon is saying that there is an expectation of additional rate cuts.
China monetary report just reiterating its standard rhetoric that they will realize the appropriate growth in credit and social financing. Again, standard language here in this Q2 monetary report.
All right, looks like we're going to have work to do. Lots of fun coming up.
China's central bank reiterating that they will comprehensively use multiple monetary policy tools.
So that's what I'm thinking. All right, well, hey, thanks for being on my team. Have a wonderful weekend.
Collaborating, they'll
Scalp them if you got them.
interest rates and exchange rate reform will continue.
Peace on earth. May the pips be with you. Yeah, I'm right on the 3A2.
Russian foreign
May
minister
profits be above average.
nuclear armed North Korea.
Cheers.